Hello, everybody, and welcome back to The Real Deal. I'm Ali Fawaz, and this is The Real Deal with Empire, the show that we don't just talk about transactions, we're constantly talking about transformation. How do we get better? How do we get to the next level? And we're always looking for the next thing ahead. In this case, today, we've got a guest who's returning back to the show. But before we get into that, I did want to remind everybody to take a moment to subscribe, like, leave us a review. This way you'll also be in the know whenever a new episode drops. So we are in season 3 now, and we're looking forward to bringing you guys a lot more great content ahead. Now, today's guest is, like I said, a returning guest. Jeff Berry, the president of Milestone Mortgage, who's been in the industry for 25 plus years, is a wealth of knowledge in the space. And we're always lucky that he can carve out a little bit of time to join us so he can keep us abreast on what's happening in the industry, especially this year. There's kind of been a roller coaster of what's happening with the interest rates and a lot of questions that are floating around in terms of where's the industry going or where are the rates going? When is the market going to change? Is now a good time to start buying or should I hold off? Like all these questions, he's going to help us sift through and come up with some conclusions here. He's also a scratch golfer. Jeff, welcome to the show.
Well, thanks for having me back.
So Jeff, we do appreciate you coming back. Last time we talked about interest rates and so on, and that was quite a while back. And since then, the Fed has dropped the interest rate, but we also know that with that drop, we didn't see a very big shakeup happen afterward. But I think we're starting to see a little bit of that hit the market now. Can you tell us what do you think happened there and what's going on today?
Well, what actually happens is the market anticipates a rate drop from the Fed. So that is actually priced in weeks ahead of time. So the day that, it goes down 0.25%, the Fed fund rate, everybody thinks, okay, boom, everything's down 0.25%. That's not how it is.
Yeah.
A lot of times we go up because the market reacts differently. Once it expects it, okay, it's priced in, and maybe he might drop it 0.25 point, but he might say, but we might slow down for now. Then the market reacts badly, then the interest rates go up. So I think they're dropping today 0.25 point.
Another 0.25 point potentially.
But that's already priced in to the current loans weeks ago.
So that would explain why, I don't know when it was, maybe a couple of months back or a month back, I was looking at the rates and I said, they dropped the interest rate. And the interest rate used to be on a 30-year mortgage around 6.33, but suddenly now it's at 6.34. It went up.
Yes.
And then it adjusted and started coming back down a little
very
bit.
Common.
So that's
very common. So today you'll see some reaction in the market. After he drops it to 0.25 point, most likely, they're going to see what he's going to say for next time. And if they don't like what he says, then there'll be like a bond sell-off or something possibly. Then the rates will go up a little bit. But that's all conjecture until we see what really happens.
That being said, what were the numbers looking like this morning?
All depends on what you want to do. And a refinance with good enough credit, check all the boxes. We're below 6% most likely.
We are around.
Yeah, on a purchase, first-time home buyer, probably be in the mid-5s, all depending on the situation. But we're going in the right direction.
That is good to know. Because we know when we look at the market and we're analyzing, we're seeing there's movement happening on homes that are, $300,000 homes, $400,000 homes. When you breach that $500,000 mark and you're getting to the $600,000, $700,000, $800,000 homes, that's where there's a lot of stagnation happening in the market. And the assumption here is that people are locked in on their old interest rates from years ago when they may have locked in at 4% or even 3.5% or something like that. And so it's going to be hard to move those people out of those positions unless they really have some kind of a, drop dead event that's causing them to move out of those homes.
Well, basically, it's funny you say drop dead because basically anyone with 3% below is in their coffin. They're not going anywhere.
Yeah. That's where they're sticking.
Yeah,
they're not going to move out of that house.
You're not going to move out of the house because if they sell a $400,000 house at 3% and buy a $200,000 house at 5.5%, 6%, payment's about the same.
Yeah.
So there's really no much. That's why, in those larger scale homes, I think the market is, a little bit of a traffic jam.
Yeah, they're a little locked in there.
But once it comes down to about, 4 or 4.5, maybe below, and hopefully next year or so, then you'll start seeing movement on those.
That'll budge them.
Yes.
Gotcha. And Sounds like you're kind of optimistic about that potential.
We've been waiting for about 3 or 4 years, and whatever goes up must come down eventually. That's just a cycle of the market.
Yeah.
And so my advice would be, if you're anywhere above 7, you should do it now. If you're 6.5, maybe wait another 6 months because you want to make it worth it for yourself.
Yeah.
Don't just do refinance to do a refinance. Make sure it's worth it to
So
do
as
it.
a refinance,
Yeah.
that makes sense. And what would you say to those folks who've kind of just been sitting on the sidelines, just waiting and saying, I'm going to wait. I'm going to wait to buy my first home. I'm going to wait until the interest rates drop to buy my first home.
Never wait to buy your home, because the money you think you're going to save by waiting for the rate to drop, you're going to lose because of the appreciation of the house.
Yep.
So buy your home, get the best rate you can. Then once they come down low enough, you refinance until to your permanent rate. Then it's all smooth sailing from there.
Here's the other thing that I think about. Somebody who's sitting on the sidelines waiting, saying, I'm going to wait till the market drops and then I'm going to enter. Well, I've got news for that individual. They're not the only one that's thinking this way. So when that happens, the market's going to be flooded with buyers.
Absolutely.
And what's going to happen is the homes that they're looking at are suddenly going to go up in price because it's capitalism, right? It's,
absolutely.
It's
So
demand.
Buy. This is the best. If nobody's in the market, this is when you buy.
Yeah, and what we're slowly seeing right now is it's turning into a buyer's market.
Absolutely.
It is. The last couple of months have told us that the market is starting to shift, and in fact, we're starting to see prices come down. So homes that are sitting on the market a little bit longer, and because they're sitting a little bit longer, the prices are now starting to come down, and reality is setting in that you can't get those outrageous numbers anymore. The days of people overbidding have kind of seen their heyday already, and that's kind of, that ship has sailed. And so now we're seeing the market really level out, and that's why we're seeing the shift back towards a buyer's market right now.
Well, how is the inventory now?
Inventory, given that it's fall, it's actually still pretty good for fall. So inventory is getting better. It's definitely not as bad as it was in the summer and in previous years. So inventory is definitely starting to get better as well. And I think that is a direct reflection that we're seeing those interest rates slowly tick down. And so therefore people are budging and starting to sell. So that being said, I want to change gears a little bit and talk about technology in the lending space. So one thing that we've been thinking about is how has technology actually changed the way that a loan is originated? Are you seeing technology actually impact how you do things? Does it speed the process up? Is there a hindrance because of it? Is there more positivity than negativity to it? Because the whole fintech space has blown up in the last 10 years. What is your take on it, being an insider?
Well, it's night and day. From 25 years ago till now, the technology has made getting a loan 100 times easier. And the speed, you can now, what you can do back then took you a month to do, you can do in 2 days. You get the whole loan signed, sealed, and delivered within a week. Because of the technology, just so
it's allowing it to go
so
fast.
progressive now. It's like something else. I remember back in the old days, using fax machines and phone calls, and you have to wait 2 days for the fax to come back, and it took quite a while. Now almost everything is instant. Approvals are instant. Now you get it to the underwriter. Sometimes I can get a decision in about 2 hours.
Wow, yeah.
I got one deal clear to close within 6 hours a couple months ago.
6 hours.
Submitted at 10 a.m. It was clear to close by about 4:30.
That's pretty quick.
Yeah, that's technology.
That is pretty quick. I'm guessing like the moon and the sun and the stars all have to align for.
Yeah, it's
like
okay.
that.
I'm not saying we do it all the time, but it has to be. Yeah, everything must align. All the boxes are checked.
Yep.
And
but it's possible.
But it's very possible. Yes.
Okay.
That was my goal. Same day clear to close, and I did it.
So there's also, when we talk about technology, AI is finding its way in every space. Has it found its way into the mortgage world yet?
I have not really seen it, but then again, might be a bit behind the times when it comes to AI. So I know that I said there are some things like some what we even call it, chat robot or something.
Yeah.
That yes, it
Like
speeds up.
chatbot,
Yeah,
yeah.
you know, you ask it a question and it'll get your answer. You can send in some documents. It scans automatically, so it does save
Yeah.
time. The AI is coming in, but it's not like front and center yet.
Yeah.
I believe you still
It's
need the
kinda on
human.
the
You still need
peripherals a little
you need a
bit.
human factor. You know, in this industry to get something done. AI is not going to do it for you 100%.
Yeah. Shifting out of technology obviously can help with that process, but at the end of the day, I think in the world of real estate, it's when you think about it, it is one of the biggest purchases people will make in their life.
Mm-hmm.
The human element, I don't think, can be replaced in that. These are individuals who really are looking for somebody to hold their hand through the process.
Absolutely.
Right? And so enough can't be said about the partnership and the relationship aspect of the home buying process. How can loan officers and real estate agents work better to, I guess, service their clients? Are you seeing that there's any kind of gaps? Are there any areas that you would advise to agents? Hey, here's something that you guys can work on that'll make your transaction and the way you service your client smoother and better and all the way around.
You know, I can't say that I do. All the agents I encounter are very professional. They know what they're doing, especially the Empire agents. They have their stuff together, so there's really nothing I can tell them that they don't know already.
I think he's sucking up to some people. I don't know. No, that's good. That's reassuring. That really is good to know. So I wanted to talk to you about new construction homes.
Mm-hmm.
Right, new construction is becoming a viable option for many people that are looking in the marketplace and not finding what they want. Especially when we're talking about those homes in the 700,000 plus range, right? Once you start getting to that in that range, an $800,000 house, a $900,000 house, what we're finding is there's not enough homes in that range necessarily in the marketplace.
Mm-hmm.
So in that instance, that's where we say, hey, if we can't help you find a home, we'll build one for you, right? And
Yes.
so if somebody's going to get a house built for them, what should they know? What does that process look like? Because I think many people don't know what they don't know in that realm. For example, like how would they get a loan to start building on a house, right? Like, is there a specific kind of loan for new construction, and what does that look like?
Yes, it's called our one close construction. Now, back in the old days, construction loans were long, drawn out, very clunky. You know, now it's just like a regular loan. You know, as long as you have a 700 credit score, you can put as little as 5% down, one-time closing, and that's it. Then the builder takes over. He has his draws. Your house is built, and it's a very it's like a 12-month process. They give you a year to get your house built, which should be plenty of time.
Yeah.
But it's not like you have to go and back to underwriting for another draw. Back to underwriting, that's it. You close and you are finished. And then the whole loan is set up for you, and you're on your way to building your home.
So when you say draw, it sounds like in that loan process, the draws are during the construction phase.
Yes.
So in phase one, maybe the phase one says the foundation will be set and XYZ will be complete. And once that phase is complete, then you can come back for your second draw, which would then be the next phase. And so
Yes.
I'm assuming, does somebody from the bank come out and check or validate, or they just simply ask you, okay, what phase are you in?
I'm sure they make the builder show that he's on schedule and on time. But I said it's not. That's the process between the builder and the lender. It has nothing to do with the client anymore. He's closed and he's done. He doesn't have to keep showing up, showing new pay stubs or showing more
Yeah.
money.
They're just done with
None
the
they're closing. No, their process is finished.
Yep.
And then now it moves on to the next phase of the process, which is lender and builder. As long as they're coordinating, which they usually always do,
Yeah.
then there's no problem.
So it sounds like it's pretty simple.
Yeah,
it's pretty easy for the buyer.
Yes, it's very easy for the buyer. His part is just like a regular loan,
Yeah.
close and done.
Beautiful. That does sound pretty simple then. And then once all the draws are complete, is that the point where the interest rate gets locked in?
Yes. You have a 12-month interest-only period. Then once the house is complete, then you go and you get locked into your permanent rate.
Okay. So while the house is getting built and they're doing the draws, it sounds like, so that's where it's an interest only.
Yeah, interest only payment.
Okay. And so the payments do begin at that point.
Yes.
With just the interest.
Yeah, just
okay.
interest.
That's helpful to know. What would you, any advice, tips you would give to somebody who is considering building a new home versus buying something that's already existing?
Well, in my opinion, building, you probably, I would assume you get a little bit more bang for your buck. So, but it's the good with the bad. So you have to make sure that you have a place to live for the 12 months while you're building.
Yeah.
Make sure you're secure in that area. And more or less, the process, if that's something that you like, that's exciting, because I think it's exciting. Watching your home get built is exciting. I saw my home get built. It's very exciting.
Yeah.
It's like, so that's something I really enjoyed. If you enjoy that, then by all means, build. You get to pick out what you want. The house looks like, decorations just like you like it, and it's a fun way to go.
It's got your fingerprint all over it at that point, right? Yeah, and you're the first to live in the home.
Yes.
Nice. In terms of the future of where the industry is going, you shared a little bit earlier on that you seemed a little optimistic. Obviously what goes up eventually must come back down. Are there different products and solutions out there that are becoming more popular, or are there things that people just aren't aware of as options, like first-time home buyers, that maybe don't know that they actually qualify as a first-time home buyer? I think that's something that comes up quite a bit.
Well, the biggest misconception is a first-time home buyer is a first-time home buyer forever. First-time home buyer definition is if you have not owned a home in the last 3 years, you become a first-time home buyer again. So I think that's where people might, I owned a house in 2003.
Right.
No, you are a first-time home buyer now because you have not owned a house in the last 36 months. So that's something to be very aware of.
So they're just getting caught up and lost in the naming convention of it. But they actually do qualify if they haven't owned a house in 3 years.
Yeah, absolutely. You qualify as a first-time home buyer, which also is very income-driven, as we've discussed before. Every county in the state has what they call a median income. I think in Wayne County is like $106,000 now, right around the area.
Yeah.
And if you make 80% of that or less, that's when you get the best of everything.
Okay.
It's when you qualify for the best programs, the best first-time home buyer programs, and so that's what you want to look out for. Those are income-driven programs for first-time home buyers, and you do not have to. You can be within the 3-year span, and you'll be a first-time home buyer.
And so the sweet spot you said is if you're making 80% of that or less, you're better incentivized.
Yes, you get more incentives to purchase your home.
Nice. That is very helpful information for people to know. What do those loans typically look like? What is what do they have to put down on a first-time home buyer?
Typically 3%.
Okay.
Yeah, so it's 3% low down payment. They're Fannie Mae Home Ready Home Possible loans. There's other options, but those are most like the best ones that give the most credits, the best interest rate by far. That's where you can get yourself to the 5% range sometimes. Yeah. So that's what I usually recommend for my first-time home buyers.
So that'll even get you at around 5%, 5.5%.
Yeah, around the 5.5, between 5.5 and 5.8 could be depending on the day. Another good option I said is always FHA. The biggest misconception of FHA is people think it's only for first-time home buyers. That is not true at all. You can have had a house yesterday, the day before that. As long as you sold them, you can qualify for an FHA loan.
What's the definition of an FHA loan for those who don't know?
From the Federal Housing Administration, it's a government loan where it has much more relaxed credit restrictions. So if you're 620 down to a 580, even down to a 550 sometimes. As long as the government's backing the loan, the bank will lend the money.
Okay.
So that is a really good option for a lot of borrowers, especially borrowers in maybe in the 680 range with the credit score, because the PMI might be much higher on conventional than it would be on FHA. And the rate could be up to 1% lower on FHA sometimes. Yeah. So it all depends on the situation you're in.
Okay. And the PMI, to our listeners, can you share what the PMI actually is?
Yes, private mortgage insurance. when you're putting less than 20% down on a home, the bank wants a secondary form of insurance in case you default. Depends how big the down payment is. Can be from 10 to 20 to 35% more coverage.
Yeah.
And there's a premium every month for that you pay. It's credit score driven also. So somebody with a 760 credit score buying a $300,000 house might pay $80 a month.
Yeah.
Somebody with a 660 might be paying $380 a month. So that's where you might want to go to FHA.
Yeah.
You don't want to pay that much in a mortgage insurance premium that you don't have to pay.
Yep. And then that mortgage insurance premium, it's not for the life of the loan necessarily.
It's till you get 20% equity.
Yep. And once you hit 20% equity, it falls off on its own. What do they have to do at that point?
Well, either it fall off, it gives you a date where it falls off on its own, or you could pay it down and get rid of it.
Yeah.
Or in a couple of years, you can call the bank and say, no, I want a new appraisal on my home. Get another appraisal, then they might,
if their appraisal comes out higher,
yeah.
suddenly you have more equity in the home.
Then,
so they say, based on your equity, you no longer have to pay the
Yes.
PMI.
Yep, they'll get rid of it for you.
Nice. So this is why we love having you on this podcast, is because you bring a wealth of knowledge. And I know that and I've seen you in action with clients and on phone calls and things like this, where you really are the kind of the consultant to your clients, helping them, advising them, and so on. What would you want to tell listeners today? I mean, is there any kind of message you want to share out there? Give yourself a plug, is what I'm saying.
Well, it's not about giving myself a plug. It's, I said, a really big decision for everybody to buy your first home.
Yeah.
So make sure you're informed. There's no such thing as a dumb question. Ask any question you feel you need to ask. You're not wasting our time. That's what we're here for. We work for you, and we're here to give you the knowledge and walk you through the process. If you are afraid to ask a question, then you're doing something wrong. Always ask what you feel. If something might be wrong, or if you don't know, that's our job. That's what we're here for, to guide you through the process, to make sure that, when you get those keys, you are smiling. And that's usually what happens in our company, Milestone and Empire together. We're really a pretty good team, and we look forward to serving you.
Before we let you go, we're not going to let you off the hook that easily. We haven't done this in a little while, but I want to bring back our kind of quick fire round of questions. The idea is respond quickly.
All right, let's go.
All right. The theme here is going to be, the first question actually, it is going to be your favorite golf course to play on.
Pheasant Run.
Okay. Your best golf outing. What did you score? What was your score?
My best score, probably like an 81. I have not broken 80 yet.
Nice. In the summertime, how many days out of the week are you on a golf course?
Just once a week.
Okay. So he's constantly working for you guys.
Yeah, we have work to do. Can't live on the golf course. I wish I could. When I retire to Florida, maybe.
If you could travel to any golf course in the world, which one would it be?
Pebble Beach.
Oh, yeah. Have you ever done Augusta?
Oh, no.
You've never done
I'd be afraid to do Augusta. I'd probably shoot 265 on Augusta.
All right, folks. We're going to let him off on that one. With that being said, again, Jeff, thank you for taking the time.
Thank you. I appreciate you having me.
Thanks for joining. Of course, we appreciate you. I think our audience always appreciates you. We'll constantly do these little check-ins with you in the future as well. But if you guys also have questions, feel free to put the questions in the comments down below or reach out to Jeff directly. Jeff, how can they get a hold of you?
Telephone number is 313-632-8519.
All right. With that said, everybody, thank you guys for another great episode of The Real Deal with Empire. We're glad that you guys are tuned in, watching, listening, however you're doing it, whether it's on YouTube, Apple Podcast, or on Spotify. Again, make sure that you're subscribing, and we hope to see you here again next week.